Welcome to this recording. In this recording, I'm going to talk about how to use the VAT Act. So what I've done is I've taken a picture of your reference, your index, which is your reference point, your first reference point, from your Psycho student handbook. So I do apologize if it looks a little bit skew and so on. It's actually quite difficult to scan this in. Okay, so what I want to talk about is just how should you approach now the VAT Act. So you've now studied VAT basically, or you are busy studying VAT, and you want to use the VAT Act, but a lot of students find it quite confusing and challenging. And yes, we address it in the slides as well, but let's have a quick little talk about this. Okay, so the first thing that you need to remember when you are studying VAT is that you are going to study VAT from an output tax perspective. So you always start with the person basically who is selling it, because most of the time, as we know, the input tax that you can claim is the output tax that was raised. So that's why it's important to start with the output tax. Now so most of the rules you'll see is basically just written for VAT, but it's actually talking about output tax, because the input tax is just the side where you claim whatever is on the invoice. There are obviously some exceptions, like second-hand goods from a non-vendor where there's no output tax, but you can still claim input tax, which is a notional input tax. And we'll talk about it in a second. So what I want you to understand is that we are going to look at it from an output tax perspective. Another important aspect that you need to remember is that you need to be able to discuss definitions, timing rules, value rules, and any other special rule that might exist for a transaction. So, how are we going to approach this then, knowing what we have to do here? So the first thing that you need to see is you will start with section 7. Section 7 is the most important section, and section 7 tells us you must calculate output tax if. So this is all revision. There is a supply of goods, services by a vendor in the furtherance of an enterprise. So there are different elements here that you obviously need to study. You need to know what is a supply, you need to know what is goods, what is services, what is a vendor, and what is an enterprise. So first up, what I need to see is, let's talk quickly here, just before I move on there. Supply, goods and services, and enterprise. All of those, you'll find the definitions in section 1 of your VAT Act. So that is what you'll go to. So I recommend, don't just read through the definitions in section 1. Read it when it is necessary, when there's something that you need to further investigate like that. Vendor, part 3 of the VAT Act discusses vendor registration, which is an important part for us. Section 23 is where they tell you when you are obliged to register as a VAT vendor. And then you'll see section 24 tells you when you get cancelled, and so forth. Most importantly, section 23. That will then answer for you section 7.1a, which tells us that you need to do this if it's a supply of goods and services by a vendor in the furtherance for an enterprise. Section 7.1b and section 7.1c says you must raise output tax if you import goods and if you import services. And those sections you can go and find discussed in section 13 and section 14 of the VAT Act. Okay, but now let's then start talking about it. So guys, as you now go, you'll encounter certain transactions where there are certain value rules and timing rules. The time rules you find in section 9, the value rules you find in section 10. They will then also in section 11 give you the zero rating rules, and in section 12 the exempt supply rules, which you know is important. And those are pretty straightforward where they are and where you should find them. Whilst I'm talking about that, guys, when we are looking at zero rating, at the back of your VAT Act, there's a Schedule 2 where they talk about the zero rating of certain foodstuffs. Right, and also the supply of goods consumed for agricultural, pastoral and farming purposes and other things which are not foodstuffs. So this is where they will discuss things like seeds and raw vegetables and so forth, things which are zero rated. So please do keep that handy and work through it. Okay, so now you've studied when to calculate output tax. Let's talk about a couple of extra things now. So, one of the most important sections for us is going to be section 16. Now, basically, what section 16 tells us is section 16 is quite a big section that has a bunch of different things it tells us. So basically, the first thing I want you to understand about section 16 is that it talks here, it talks in section 16, it splits it. It's split between, or there's distinction made, it's not entirely split, but there's distinction made between vendors on the invoice basis plus vendors on the payments basis. Now obviously you've studied what these things are, but important, what it means is, section 15 tells us that everybody is treated as if they are a vendor which has been registered on the invoice basis. But it then gives you exceptions where it says you can also be registered on the payments basis. So section 15 is what tells us that. But for us, the majority of the time, we are going to assume, unless it specifically tells us otherwise, that someone is on the invoice basis. That is by far the most common and the most important. Right, so section 16, what does section 16 tell us? Section 16 basically tells us, section 16(1), let's actually tells us that. Tells us you must calculate VAT for each period you are a VAT vendor. Basically what they're trying to tell you is you need to go and you need to calculate what is the output tax and what is the input tax. And you need to remember that input tax can be deducted from the output tax. Now, if your input tax is 100 and your input tax is 80, it means 20 rands you owe SARS. If your output tax is 80 and your input tax is 100, it means there's a negative 20 SARS owes you. That rule is discussed in section 16(5). Right, that's where they tell you that. Okay, so that's just for you to know about it. So what I want you then to see is section 16(2) tells you you must have a VAT invoice if you want to claim input tax. That's the most important. There's other rules also in there if there's no VAT invoices available, other documents, but that's the most important one for you guys. Right, guys, then section 16(3). This section tells you you must claim input tax. Right, you must claim input tax, and it tells you when to claim. Now, the most important rules that we have there will be your second-hand goods from a non-vendor. That's where the timing rule sits. The value rule sits in section 1 in the definition of input tax, you'll remember. Okay, so that's where the timing rule is for second-hand goods. This is also where the timing rule is for fixed property. Now I'm just reminding you, section 9(3)(d) gives us timing as well, but section 16(3) overrides that. Okay, so that's just important for you to remember that. Okay guys, so there's a whole bunch of other stuff in there. You'll basically see section 16.3a and there's a section 16.3b. There's other sections also, but those two, section 16.3a talks if you are registered basically on the invoice basis, and section 16.3b talks if you are registered on the payments basis. So the most important, section 16.3a for us. Right, then section 16.4 is a section that tells you you must calculate output tax. And the most important rule there is the output tax rules on fixed property. Again, it gives you a timing rule, and the same thing applies. Section 9.3d is the actual timing rule, but section 16.4 overrides it. Alright, so that's basically section 16 guys, and why that is important, because it gives us those special rules. Section 17 then is also an important section, and what does section 17 tell us? Section 17, 1 tells us you must apportion input tax. So that is where if you're an 80% vendor, you can only claim 80% of the input tax if it is used for the entire business. Right, those normal rules. Section 17.2 is the section that tells you when input tax will be denied. Right, and then obviously section 18 is where we have the change in use adjustments, but also a fringe benefit rule. Section 18a is our going concern section. Section 18c is the new leasehold improvement section. Then guys, the rules around what must be included on a tax invoice, what must be, so where they tell you you must include the name of the person and their VAT number and so forth, that's all discussed in section 20, and for credits and debit notes 21, and we have our irrecoverable bad debts in section 22. Right, those are some of the more important ones guys. Please also remember you must refer to ITC examinal pronouncements to make sure that you don't study sections that are not necessary. These are the SICA ITC examinal pronouncements. Alright guys, so basically, again, quickly, how will you start it? You will start section 7. Section 7 tells you how to calculate output tax. During that time, you will look at some definitions, you will look at the timing, the value of suppliers, and zero and exempt rating, because that is basically where they tell us the transactions. Section 13 and section 14 also gives you transactions on which output tax must be calculated. Now, the timing of that depends on whether or not, right, the timing of that depends on whether or not you are registered on the accounting basis, which is an invoice basis, or the payments basis. Section 15 tells us everybody's on the invoice basis except if you're on the payments basis. Section 16, like we said, then tells you you must calculate VAT, and it tells you when to claim input tax on certain transactions. It overrides the other sections. So second-hand goods and fixed property tells you also when to pay output tax on things like fixed property. Right, and then you're basically ready to start looking at proper input tax. So section 17 tells you how to apportion it, and you then just have the couple of odds and ends like in section 18. Right, so guys, the VAT Act is really quite simple to work through. Use it in conjunction with your notes. Don't be afraid of it. Learn how to use it. It can be your friend in the exam.